America's largest brokerage by deal volume, 2 years in a row according to Real Trends. But Compass, also one of the largest loss makers in the history of residential brokerage. There's so much going on with the company, and I'm very happy today to have one of its top executives, Rory Golod, who is the president of growth. Rory, thank you so much for joining me.
Thank you for having me. Good to see you.
We're chatting right after your first quarter earnings, and the losses that Compass saw were about 150 million. That's the loss. But it looks like the street has responded positively to whatever happened in the quarter. So maybe let's start with explaining that, because to me, it reads like a loss.
Yeah, absolutely. Well, first, thanks for having me.
Absolutely.
So I think one thing that's really important to qualify is the GAAP net loss that's reported of 150 million. That's not a cash loss in total, right? So that includes stock-based compensation, includes depreciation and amortization. So if you back those things out, the actual cash loss in the quarter is about 80 million.
Okay.
That is down significantly from the cash loss in the first quarter of 2022. And so I think what investors are reacting to is the fact that last year we embarked on a pretty aggressive cost reduction plan.
Right, I think you talked about 600 million is what the target was.
Yeah, a couple $100 million of cost reductions that we wanted to pull out of the business with the goal of being free cash flow positive this year.
By Q2?
By Q2 being the first quarter that we would do it.
Yeah.
And then for the whole year. If you add up all the quarters for the year, with the goal of being free cash flow positive. And so this first quarter, I think what you're seeing investors react to is the fact that we've brought our losses down and we signified on the earnings call, Robert Kalani, our CFO, Greg Hart, our COO, all reaffirmed that we intend to be free cash flow positive in the second quarter and free cash flow positive for the year. And so I think investors, they're always looking forward, are looking forward towards the subsequent quarters and saying, okay, you're proving to us that you actually can get there. And you can get there in a market that, by any stretch, no one would describe the current real estate market as booming, right?
I think that's the other big point, is that intention is one thing, the reality in which you operate is another. And I want to place a context, just to be fair. Anywhere lost close to 140 million. I believe Element lost 15 million. They're a lot smaller than you guys are. There's very few brokerages that are able to make money in this market. Yes, you said it's not a cash loss, the 150, but it's still money. I mean, there is a reason you have to report that 150. For sure. And there is a reason that investors are concerned that you've lost north of 1.1 billion over 2 years and a quarter, right? That is concerning.
Yeah, I think actually one of the reasons the stock is up over 30% today is because I think a lot of those concerns have been mitigated. And the reason why is if you think about our business, you take a step back, many of these other companies that you mentioned that also lost tens of millions, if not hundreds of millions of dollars, have been in business far longer than us. You know, we've only been a public company for about 2 years. And when we were building the company, the reason we raised so much capital, investors gave us that money and said, use this capital to grow. Don't raise it from us and put it in the bank and do nothing with it.
And to be fair, you did grow tremendously. I think you're the fastest growing brokerage that I've seen since I've covered this thing.
Yeah, we've gone from not existing 10 years ago to being number one in the United States. So in doing that in 10 years, obviously the intention of raising all that capital was to spend it on things that would help attract the best agents and retain them. That's expansion, building technology. We spent close to $1.5 billion of the $2 billion we raised on building technology alone. And so the intention was always use that capital to grow, expand, and build the business, and then move the company towards profitability once we've done that. And now that those investments are behind us, we now can really focus on being free cash flow positive and being profitable. So I don't think investors were surprised. We certainly weren't. The intention was always invest that capital, spend it to grow and build the business. And now that we've done that, now that we've built that technology platform, now that we're in hundreds of markets around the country, now that we're number one, now we can actually really focus on generating free cash flow. And once you generate free cash flow, it's effectively like raising more capital, because you can take that money and then reinvest it in the things you want to do.
A couple points there. One is your investment, the moat that you've created through technology, through whatever else you offer. It's not a moat that can just sit there. It needs to be constantly watered.
100%.
And I think what's happened is you've slashed a lot of your marketing staff. You've slashed a lot of your support staff. You said that you're not going to do anything in terms of agent-facing roles, basically stuff for whoever existed to make agents' lives easier and better. But at some point, you're going to take a dent on that too, right? So when you stop feeding the beast, you fed the beast, you grew, you did all that, you bled a lot of money, but you did feed the beast. When you stop feeding the beast, something's got to give. And I think agents are realizing that. You're seeing a lot of that. We have reported on concerns that you're not providing as robust a package as you used to. So how do you respond to that?
Yeah. Well, first off, I'll challenge you on bled in terms of money. I'll use invest.
Okay.
But The proof is in the actual results. So we are still spending over $100 million a year just on research and development when it comes to technology.
Okay.
Right. That is far more than any brokerage combined, most likely in our space. Certainly more than any company that we compete
I'll give
with,
you that.
Right.
No question.
So $100 million of annual investment on top of $1.5 billion of historic investment. So the moat there is so vast that we don't see a world where any traditional brokerage catches up.
How'd you get to the 1.5 billion? When Robert talked about this about a year and change ago, the number he used was 900. So you're telling me in the last year or so you've spent another 600 million?
No, cumulatively over the course of our entire existence. When you add in the actual compensation for all of our product and engineering staff, when you add in vendor costs, server costs, everything, acquisition costs for buying certain technology companies, you put that all together, that's $1.5 billion.
This is the number that Compass is using now, 1.5 billion for technology?
That's correct, including equity compensation, cash compensation, all those different things, add that up, it's around 1.5 billion. So that's the start, the head start that you have. Every year, we're still spending $100 million in technology, right? So on the technology side, there is no world in where we see someone else being able to catch up to that because no company is going to be able to raise the kind of capital. No investor is going to finance that. We're seeing it manifest in the things that we've built and released. We're about to actually release a new program called Performance Dashboard, which is an interactive dashboard for all of our agents to track their performance, the performance of their teams. We're way ahead on AI. We've been using AI internally for almost 2 years now. We have a product called Likely to Sell, which basically is an AI recommendation engine that recommends which of an agent's contacts has a higher likelihood of selling over the next 12 months, and they should reach out to that contact. Now, for perspective, those are converting around an 8% rate and have driven hundreds of millions of dollars in additional commissions to agents. We have a pretty robust roadmap for the next year, 2-3 years. I mean, we have a lot of things we're going to be building, particularly on the AI side.
Would you license that technology out to at some point? Because that's like...
Here's the thing with licensing. There's definitely an opportunity to do it. Not in markets we're in. We don't want to give our competitive advantage in a market to someone else where our agents don't have that competitive advantage. So in every market we're in right now, we wouldn't do that. But if you think about new markets, absolutely that's something we could do. And we're actually being approached by a lot of people asking for that. We're choosing to go slow there because our responsibility is to continue to build the platform for our existing agents. So that will be part of our future. But in terms of technology investment, we are continuing to put more money into technology than any other company combined. Now, you mentioned scaling back on other employees. Last year, we did do rounds of layoffs. We did do significant expense reduction. It was the right thing to do.
In technology, in many different fields, including technology.
Exactly, including technology. In terms of employees and other functions, a lot of the reductions we made were, as you said, in non-agent-facing roles. In certain areas, in certain parts of the company.
What I said was that you guys said it was non-agent-facing roles, but at some point, the agent is affected. That's what I think.
Yes, and there have absolutely been aspects of the business that we've had to recalibrate. But I think if you look at 2022 and you look at overall our value proposition, if you're an agent at Compass relative to an agent at another company, and you're at Compass and you still have an in-house marketing and advertising agency nationally of over 300 people. You have an agent experience team of someone who onboards you, teaches you how to use the entire software platform, and helps you on a day-to-day support basis of hundreds of people around the country. You still have this technology platform, which does more for an agent to grow their business and save time than any other company has even thought of in the residential space. You still have the best national referral network, right? 10% of our transactions last year were inter-Compass referrals.
But let me cut you off.
So if you add those, let me just finish.
Go ahead.
So if you add those things up, yes, there's going to be a reduction in certain things. Certain roles we've had to take down. We've had to lower limits on Compass Concierge. We've had to do those things, absolutely. But if you include all the things that we're providing and continue to provide, you talk to most agents, they're going to tell you the value they still get from Compass is still massive. And that manifests itself in retention, in them growing their business, and particularly in what we're seeing now, which is agents coming back to Compass, which I want to talk about.
I'm glad you used the word manifest. It should also technically manifest in revenues. Your revenues are down 24% year over year in Q1. Revenues are down 31%. And revenues are, transaction volumes down 24%. So the money you're putting in is clear. The money that's coming out in terms of actual deal volume is not so clear. So at what point does the reality of the market hit some of these kind of grand ambitions you have?
Look, we are in residential real estate at the mercy of forces that are far bigger than any of us, which is interest rates, the Federal Reserve.
Yeah.
In a world where interest rates went from, this time last year, probably around 3% to now 6.5%.
I have to cut you off here. I think some brokerages could make that argument. You guys cannot make that argument because in 2021, how much did you lose?
2021 in terms of?
Your overall losses in 2021.
Yeah, I don't have it off the top of my head.
494 million.
Okay. Is that cash loss or is that
That's
net
the
loss?
overall loss.
So the cash loss is probably different than that.
Okay, but still, right? That is a record market, record low interest rate. So when another brokerage makes that argument, I can get it. But in a market that was bananas for everyone, you guys had a tough time.
But here's the difference.
Yeah.
I think people externally qualify as at a tough time. 2021, we launched dozens of markets around the country. We hired hundreds of employees. We hired thousands of agents. We acquired brokerages. We launched technology. We were doing Compass Concierge to the tune of $75,000 to $100,000 per project. To us, we would do all of that all over again. So people look at it as like, wow, you lost all this money in the best market ever. Our mandate, what we were purposely doing, was spending and investing into that. If we didn't do any of those things, if in 2021 we didn't spend $1 on technology, we would have been profitable. It's a selective choice we made. Now, we had the luxury of being able to make that choice because we had so much capital and could do that. That was always our business model. Now, this year, next year, the year after, if we're still losing money, then I want you to hold me accountable to that because then to that point, we're coming out and saying we intend to be free cash flow positive. So if we don't, then we didn't deliver. There's no way that anyone could say, and you can't say that we're not beholden to interest rates of the larger market because we're the number one brokerage in the country, right? Mortgage rates, what the stock market's doing, inventory. Every brokerage is seeing a reduction in sales volume and revenue. The one thing I want to add to this point, though, is that if you look at our numbers, you're talking about, hey, you're investing all this money. Where is it showing up in the financials, right? Which is the question. Obviously, revenue is such a function of what's going on in the world.
I'll give you that.
You look at our retention, right? 96% agent retention. That's massive for our industry. If you look at our agents growing market share, we actually grew market share in Q1 of 2023 relative to Q4 of 2022, relative to the prior quarter. So even though revenue is coming down because the market's down, we're growing market share. The other thing we're seeing is agent recruiting. We stopped offering cash sign-on bonuses and stock this past year, 2022, to agents. Stock in January, cash sign-on bonuses in August 2022. Since then, we've hired over 1,000 agents who've come to Compass. These are principal agents, producing agents, some who are top agents in their markets. Without those things.
I have to make a point, though, that Robert did say that you're going to be targeting a lot more sort of mid-tier agents. Initially, let's say Compass got an agent in New York, it was probably a story for us because that agent was a brand name, had a big book of business. I can name multiple and all over the country. Now you're going for kind of mid-tier agents that don't necessarily have the same book of business. So
which is true.
One of the things that Robert said on the call that was fascinating was, I'm going to butcher the quote, but he said something like, agents are paying us, giving up a greater share of their commissions to come to Compass. Now I wonder, is that lower tier? Like if you were at a Remax and you were a 99% agent and you come to Compass and you're an 80%, is that the kind of agents we're talking about?
No, so your point is right. Think about if you build a sports team, if you build a basketball team and you get LeBron James and Kevin Durant as your first players, after that, you're going to want to build in around them. So we purposely did that, started with the top agents, really the agents that were also not only the top producers, but most likable, most collaborative. And now we're starting to recruit more mid-level producing agents, who, by the way, our thesis is come here and be those top agents and use the tools and resources we have. Now, when Robert said that, what we're seeing is close to 70% of the agents that we've recruited have come to Compass for a lower split. Because the decision they're making is we're saying we're not going to pay incentives, cash incentives and sign-on bonuses to get you to come here. The reason you should come here is because we have this technology platform, brand, referral network.
I get the pitch.
So come here, grow your business, grow your net take home, and then actually that's really what matters is your net take home.
You made a point before that Compass wasn't closing offices, right? Like that was a big part of it. Have you reversed that strategy at all? I know that 95th Avenue, which was one of your major offices.
That was an employee office,
so you're saying the agent-facing offices are thriving, bustling, and are not set to close?
Yeah, that's absolutely correct. Now, we've consolidated some offices. We've had some employee-focused offices, which we've decided to sublease. Because
I get that. Let's talk about agents.
In terms of agents, the only offices we've closed is where we've had redundancies. So I'll give you an example. In Northern California, we acquired 3 companies in Northern California. So there were some blocks and streets where Compass was already there. And now you have 3 other companies that all joined Compass. So now you might have 4 Compass offices in a 5-block radius. That obviously doesn't make sense.
Your cash on hand is about where it was at.
Yep.
But you did draw down 75 million from your line of credit, right?
Yep.
So what was that about?
So
And you do need to have 150 million, I believe, is your minimum balance to keep that line of credit in good standing.
So we've actually paid that 75 million back.
You have,
yeah.
But you did it after the quarter.
Yeah. So the way it worked is right when Silicon Valley Bank went out and Signature Bank, and we started to see this regional banking crisis, we just out of an abundance of caution said, let's just draw down more on that revolver and have the cash, because who knows what could happen.
Do agents actually use your technology day to day?
100%.
Real agents. I'm not talking about rinky-dink agents.
Well, we don't have any rinky-dink agents, right? Our average production is like many times that of the industry.
Right.
So here's what I would say. One, call any Compass agent. I actually challenge everyone to do this, right? People always ask this question, like, does your technology actually matter? Do agents really use it? We know that agents need software to run their business. The average agent's using 12 different platforms to run their business. We're sitting here in New York City. We're the #1 brokerage by transaction count in New York. Number 2 and 3 don't even have a consumer app, right? So the landscape is so barren.
Robert Refkin, a longtime mentor of yours, you were his chief of staff for a long time. You've been through this company and seen many different roles. Like if I added up the list of your titles, we'll be, stretch out the room.
It's been a lot of stuff.
Right, but let's put yourself in his shoes for a minute. How does Robert Refkin wake up and face the street quarter after quarter with these kind of numbers? Like, what is the messaging? How does he stay consistent? I want to get kind of the human side of it.
Yeah, for sure. So look, I think
knowing that you know him well and you've worked with him, right?
Look, Robert he's remarkable in many ways. I think 2 things that he's demonstrated over the last year that have been directly impactful to the success we've had through this market moment is, one, he's able to see things many steps ahead. Right. I'll never forget, years ago when we launched Compass Concierge, we had a conversation with an agent, Dana Green in Northern California, who was talking about staging properties and how she front loads the cost for staging. And literally in 20 minutes, he's like, I see a world where the company front loads the cost, it goes beyond staging, and this is going to be huge. And lo and behold, years later, like Compass Concierge becomes this huge thing.
You gutted that program though.
Well, we didn't gut it. We reduced it down. But look, there's no bank in the world right now that would give an agent 25 grand at zero interest, zero cost to upgrade someone's home. Right. So that's a massive value add. My point is that he sees things before they happen. Last year, around this time last year, he was the one who said, look, this market is going to go down and it could get really bad. Yeah. We can't risk it. We can't hope it's going to go better. I remember him saying, hope's not a strategy. Right. We have to act as if the market's going to go down, and we have to make sure that the company is strong and in solid footing. So when we were making those cuts and reductions, while it was difficult to do, he knew that on the other side of that, right, everything that goes down goes back up. If we can maintain those reductions, on the other side of that incremental lift would be significant profit.
Are your overall exclusive listings, where are they at compared to last year? Do you have more exclusive listings now? You've grown agent count?
Yeah, we've grown agent count, we've grown listing count. We have a tremendous amount of private exclusives right now. So we took the concept of off-market inventory, which has existed for decades in our business, but it's never been in one place in a platform. Yep. So we built something called private exclusives, where agents can go in and see all the off-market listings that every Compass agent has. Okay. That product was built not because we wanted to do deals internally. Okay. It was just built because agents said, hey, we want to be able to have this for our sellers. In this market with low inventory, it's been a massive differentiator. It's actually a thing that's helping us recruit agents.
When you have something that is as transformative or has the potential to be as transformative as AI, does your tech moat have the same value, or do you sort of get diluted compared to a competitor who could just plug in with those AI tools?
Yeah, it's a great question.
Because look, you've spent $1.5 billion, which is a tremendous figure in Resi.
Yeah.
Compare that to what OpenAI or Google. You look like
OpenAI is saying Microsoft invested $10 billion.
Correct. So if someone can leverage that technology, does your investment still matter as much?
Yeah, that's a great question. So I actually think it compounds the size of our moat. I think it's going to make it 10 times harder for people to catch up. And here's why. First, AI is driven by data. Data is the foundation. Without data, you don't have AI, because all AI is doing is taking tremendous amounts of data, pulling out insights, and then giving you those recommendations. The reason it can write listing copy is because it's analyzed 10 million listings and has pulled out the threads and understands how to do it. We are the only brokerage, residential brokerage, that has been able to capture all that data because we have a technology platform. So we have the data infrastructure. No one else has that. They're going to have to build that. The second thing is you need the people to build that technology.
So in the sense that you're saying the inputs that you have are superior to someone
Exactly,
else.
right? Because no residential brokerage has a platform that's been collecting data for 10 years to be able to action on it. We're not the only ones who built the CRM.
Yeah.
There are a ton of CRMs, but are they integrated into the rest of someone's workflow? Are they built for real estate? Do they function on mobile? Right. So for the last 15 years, brokerages have been outsourcing technology and it hasn't worked. And so whether you're outsourcing a CRM or outsourcing AI, it's still outsourcing.
Right.
The best technology has to be built in-house and has to be built by great engineers. And so as long as we have that advantage, we're going to be in a great spot. Now, in terms of the actual applications of it, likely to sell AI recommendations, that's a big thing. We've been doing that for almost 2 years.